One of the important things is if you want to be a trader, there are levels to buy. Like for instance, I would probably look to buy 28 to 29,000 right here just for a quick bounce back to 30 or 32, right? And then you get out, you can either go short. Yeah, so I mean, the CPI data coming in around 8.5%. PPI came in the day after. It was also very, very hot. Market had kind of anticipated it being at those levels, so you didn't see a massive reaction in the stock market or in crypto. I mean, we rallied for a couple days now in crypto. We're pulling back, but bottom line is, it just kind of reinforces everything that we know, which is inflation is here. It's not going away anytime soon, and we're going to see the Federal Reserve have to tighten dramatically. The Fed has really kind of sidestepped what they used to do. So over the last 10 years, it was always the stock market first, right? Inflation was low. So how do you stimulate growth, get the stock market to rally? By default, crypto had an amazing, amazing move, both in 2017 and then 2021. But now you're at a point where the Fed is saying, okay, listen, the scarier monster in the closet is the inflation monster. So now forget about the stock market, forget about crypto and all these other things. We now have to tighten liquidity. And I think that's really, really key to understand as an investor, that the mindset of the Fed has changed. So we heard for so long, don't fight the Fed, right? Don't fight the Fed when they were printing money. So you just wanted to go long, buy the dips, go long. Now, technically, we should be kind of thinking about it the other way. Don't fight the Fed, but this time it means, be very careful going long, assets like crypto as well as stocks. I do think as the supply chain kind of gets fixed, you'll see inflation come down, but it's not going to go back. It's one thing if inflation came back to 2% or 1% or 0, then it's like, okay, that's fine. But my fear is, and I think this is what we're going to see, is that inflation is going to be very sticky at like 5%. And 5% inflation still really sucks, right? I mean, it's basically 95, you have a dollar every year, it's 5 cents less, right? And it just continues to decline. And so, 5% inflation is not good at all. And if that's their target, if that's their long-term result, that is really, really bad over the scheme. I mean, think about it. Over 10 years, your money is almost worthless at that point. I mean, you lose at least 50% in about a 10-year span. So I think this is what we're going to see. So I think, inflation, it may kind of be around the highs. I think it stays here for a few months, then maybe comes down, and people will probably congratulate the Fed. Oh, you're doing such a great job. Your inflation's coming down, not realizing that it's going to be a longer term problem just at kind of a midpoint of like 5 or 6%. That naturally everything has a cycle, right? You have cycles in nature, you have the seasons, you have the months in the year. We cycle around the sun as the earth, the moon cycles around. There's always a cycle. And with markets, they're supposed to have natural ups and downs. You're supposed to have, expansionary periods and recessionary periods. The great thing about letting things run naturally is that you have very minor recessions. No one likes to go through it, but you have a little downshift and then you grow again. When you start to get into this kind of fiscal, steroids, it kind of throws the whole cycle out of whack. So you have these expansionary periods, like from 2009 all the way to now, where it was fueled by this just injection of constant money. And the problem is that the cycle wants to come back, and eventually it will. The problem is it's way worse. When you artificially inflate things, then the down cycle is artificially bigger as well. And that's really the scary thing. And we kind of saw that in 2008 and 2009, where you had a lot of the same factors, just not even close to as crazy as we see now. But we saw what happened, the financial collapse. I mean, banks, mega banks were needing bailouts from the government. I can't even imagine what we could see in the next 10 years as this big one gets unwound. My biggest fear now is that you're going to see what's called stagflation, where you have this inflationary bug, but the economy actually is no growth or negative growth, meaning a recession. And that's the worst. And the reason why it's the worst is that if you have growth and inflation, at least people are making more money while prices are going up. So it's like, okay, well, an apple costs $1, but now I make a dollar more in earnings anyway. So it kind of evens out.
Right.
When you don't have growth and you have a recession, people are losing their jobs and prices are going up. Right now, we kind of have some growth, but prices are going up way faster than wages, and that's a big problem for a lot of people, especially food and energy wise. So I do think that, inflation is here to stay. Hyperinflation, I really hope not. I mean, I'm hoping that the Fed is starting to curb it now and will be aggressive enough. But what I really fear is that inflation is going to stick around for many, many, many years, and that we're going to have to go into recession. And I've racked my brain, and I keep on asking people, I'm like, okay, so if we go into a recession, how do we get out of it? Right. So in the last 20 years, it's always been the Fed has come to the rescue. Well, with inflation at 8% or 10%, you can't
Right.
come rescue it with more money printing. So what can they do? The Bitcoin chart that I've been following has been amazingly, amazingly accurate in terms of the channel that we've been stuck in. And this goes all the way back to January. And basically, you create this channel, this white line channel with this point down here and this up here. And you just connect the exact highs here, the exact lows here, and it gave us this exact high. So I know a lot of people were kind of hearing, oh, we're going to have a major breakout on Bitcoin, and it goes right to that level. If I throw in my 200 moving average right there, and it just reversed and came crashing right back down. I did buy Bitcoin right at this trend line here. We've gotten a little bit of a bounce. Now today we're seeing the equity markets decline. This needs to hold here. If this trend line doesn't hold, then you're going back to this level down here. And that's the one that if you're someone who's like bullish on crypto over the next 6 months, you got to hold this line. I mean, this is like hold the line, kind of thing, where if that doesn't hold, then that's concerning. Then you start having the potential for us to go quite a bit lower. Let me zoom out a little
So
bit.
what is that price of that line?
It's right around 37,000. So we're
Okay.
still 3,000 above it, about just under 10%. But that's the one where if you break, basically this pattern formation from the drop is called what we would refer to in the technical world as a bear flag. So it's a big move down and then a lot of choppy sideways consolidation. But if this lower trend line breaks here, that's where you start to get that bigger move down where you could go into the 20,000 range. There'll be some stops along the way, but that's the one that everyone should be watching very, very closely. Mainly because the chart hasn't changed, right? And again, I think it's important for us to be as logical, as disciplined as possible, where, if the chart still says it, then I have to go with that. And what you can see here, and I think, when we talked before, it was kind of in this same range, but you've stayed right in within this pattern. So therefore, the pattern is the pattern, the odds, the probabilities are the probabilities, and it still signals the likely scenario. It doesn't guarantee it. I think that's important, but the likely scenario would be for a move down. Now, if we started trading up here, then that would change my perspective on it, because now you've broken this kind of bear flag pattern. But right now we're stuck within this range, and you have to just go with what the charts, at least for me. I always like to say, listen, my emotions, my heart might be somewhere else, but the charts are always, the charts generally are going to be right more than me. Yeah. Learned a lesson so many times, in my early career, so many losses came from my hopes and dreams for a technology with a stock, or, and eventually you get burned so many times. You're like, okay, I got to try to shut off that emotional side so I just don't keep losing money. But yeah, that's really where I found my groove, is just saying, hey, listen, whatever I hope, whatever I fear, it doesn't matter. What is the chart saying? And in this situation, near term, if this white trend line breaks, that's where we get the bigger down move. Now, like you said, I'm a huge believer. Bitcoin since 2012, I've been following it. And the idea that, I used to watch in the stock market, the Federal Reserve bailing out these banks from 2009 with just like printing money, the government printing money. And it just doesn't make sense, right? Anyone who runs their own household and has to budget their money, it's like, well, this is never sustainable. So that's where Bitcoin for me comes in. And it's just the genius behind it, is it gives us that alternate investment where even if they do print trillions more dollars, the idea is eventually Bitcoin becomes that asset that goes up as the dollars get printed, and it offsets the losses that you would otherwise have by holding dollars. It's just Bitcoin isn't at that point yet, right? It's still such a new asset. It's kind of like what we'd probably consider to be an adolescent. It's not a mature adult yet. Once it's an adult, then I think it behaves much more like gold. It goes up when there's fear. It goes up when there's money printing. That'll be the way it eventually reacts, just not quite yet. So the biggest thing, and this is the only thing as a technical trader, you just basically have history on your side. And again, history doesn't guarantee that it repeats, but we do know it usually rhymes. So what I do is I look back at like 2017 and I basically see, okay, well, from the peak in 2017, we didn't bottom out until almost, basically 2019 to 2000, into this area here. So you basically had a full, uh, basically 2017. Yeah. So you had a year to a year and a half where it was kind of in this downward shift before you started to curl back up. So I kind of, and if you look at 2013, it's very similar, 12 to 18 months. So that's all I can really go by, is saying that, okay, from our high pivot in November, I just would look out 12 to 18 months and say, okay, we could be in a down moving market until that point, and then start looking for that target to get hit. Now, whether it's 20,000, whether it's 18, whether it's 15, it's hard to know. But I do think, again, that's kind of your angle for how you try to figure it out. Short term, like I said, I mean, I'm a trader, right? So in my crypto service, Verified Investing Crypto, we shorted it right up here. Then I covered it right around here. We went long right here. So I'm long Bitcoin right now. I was up a little on the trade. We're now basically flat on the trade, but I'm just playing these levels. And the beautiful thing about a chart like this is that it really gives you the ability to trade while there's just a lot of chop going on. So you short resistance, you can see the levels here, and you can buy support. Now, my one fear is that we see a dip here, in which case I'll probably add to my position. But at that point, then if we got down here, I would have to stop out. So you always want to kind of, one of the biggest things for traders is that, and for those of you watching, if you're trying to become more of a master trader, you always want to think like 3 steps ahead, right? So you don't want to just be like, oh, I like it here, so I think it's going to go up. Well, yeah, that's what we hope happens, but what if it doesn't? How do you react? How do you cushion yourself so you can maneuver? And what I like to do is, I think I only have about 4% of my portfolio in Bitcoin here, but if it drops here, I'll go probably to 10% and then look for the bounce. And then if it goes here, I stop out. And so you're always looking at both sides of the trade, both if it makes you money, but also if it goes against you, so you know how to react. I don't see it. Yeah, I don't see it this year. According to the chart, 2022 should continue to see further downside. I think it makes a lot of sense if you look at what the Federal Reserve is doing with hiking rates. We've seen technology take a big hit, and technology stocks like Tesla, Apple, and these kind of stocks, they've already dropped down. I think there's more downside there. So I do think, you'll have opportunities to buy key support levels to make money on Bitcoin all the way down. But my guess is that we are lower than here by the end of this year. Now, the one thing that would change my mind would be if somehow we start trading above this area here, then I think you have a shot at your all-time highs. But as of now, you're stuck in this bearish consolidation, and inevitably, I think at least the odds favor that we do see a drop. Probably within the next month or so, we have a good shot of breaking this area, and that's where you'll get your next move down. Now, there will, one of the important things is, if you want to be a trader, there are levels to buy. Like, for instance, I would probably look to buy 28 to 29,000 right here, just for a quick bounce back to 30 or 32, right? And then you get out, you can either go short or you can let it fall. And then there's more levels along the way, like 24,000 here. And then eventually you get down to the big one. And this is going to be the big one, which is going to be that 20,000 level on the chart right here. That is going to be mammoth support. Now, that's never happened in a previous Bitcoin cycle. So that would be a first.